Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the 4-hour chart with the bullish scenario where we are looking for a 5-wave impulsive structure to the upside, after which we expect a bigger corrective structure to the downside. In this scenario, we're looking for wave 3 to have finished and now a wave 4 towards the downside. The most common target for a wave 4 is between the 236 and the 05, giving you an area between 50.3k and 47.4k taken from the low of 2 to the high of this wave 3. The invalidation for a wave 4 is the 0.618 at 46k. In this scenario, on the lower time frame, we are then looking for corrective structures, and in this scenario, we're looking for a 3-wave move to the downside in a wave A or W, hitting the target area for a wave Y or C perfectly. This is the trend-based fib extension taken from the high to the low to the high over here, very nicely respected indeed. After this low has been made, we're looking for a move to the upside in either a wave X or a wave B. So we're looking for a sideways corrective structure in a WXY or an ABC flat structure. For the flat, we're looking for a 3-wave move in A, 3-wave move in B, and then a 5-wave move to the downside in wave C. Most common target area for this wave B is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low of A, giving you a target area between 53.7k and 53.4k, which is quite interesting as that is right around the monthly gap top as well at 53.3k. After that, we want to see a 5-wave impulsive structure to the downside for wave C, ending somewhere in the most common target area for this wave 4. In this target area for wave 4, we have a daily as support here, daily naked point of control as support, and over here below as well at 47.325, another daily naked point of control. In the WXY scenario, we're looking for a more sideways corrective structure, WXY. The common target area for wave X is between the golden pocket and the 886 taken from the high to the low of wave W, giving you a target area between 52k and 52.6k, after which we expect a wave Y to the downside. In the bearish scenario on the 4-hour chart, we're looking for a 3-wave structure to the upside in wave A, B, and the wave C. The 1.618 is for a wave C, still a common target, but the moment you're going to move above the 1.618, probabilities decrease for a wave C and increase for a wave 3. In this scenario, you're looking for impulsive structures to the downside and you want to hit the 0.618 over here, which is an invalidation for a wave 4 as mentioned earlier. But for a wave C, it is important to move to the downside to invalidate an impulsive structure to the upside. 46k therefore is very, very important. Now, as mentioned, if we are looking for wave C to have ended, then we're looking for an impulsive structure to the downside. There is 3 options that we have: an impulse, a diagonal, or a double 1-2. For an impulsive structure, we're looking for 1, 2, 3, 4, 5. We don't want overlap between 4 and 1, but as you can see over here, there is lots of overlap, so that has a low probability. If we're looking at a double 1-2, where we have a wave 1, 2, 1, 2, and then we will eventually want to see a wave 3 to the downside, also lower probabilities because of the 3-wave nature that we have over here and price ending on the highest volume. If we then look at the CVD divergences, then we have bullish CVD divergences here that we got with the drop towards the downside. The target of the bigger bullish CVD divergence is this high over here. More locally, we also had a buildup of a bullish CVD divergence. This small one already played out, higher low in price, lower low on the CVD. Target was this high, has been taken. Then we have the bigger bullish CVD over here. This is also again a higher low in price, lower low on the CVD. The target is this high, almost taken, but not yet. On the chart, it looks like this. You can also see here the bigger CVD divergence. On blue, we have a higher low in price, but on blue, we have a lower low on the CVD with this move to the downside here. And then more locally on yellow, we have the higher low in price, but as you can see, higher low in price, lower low on yellow here, and also more locally here. So we have some bullish CVD divergences, increasing the probabilities for eventually bullish continuation. So if we then look at the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities are higher for an impulsive structure to the upside instead of an ABC, where we are looking for a wave 4 at the moment. And as you can see, the target area for a wave 4 has not yet been hit, so therefore generally we're still expecting price to move to at least the 0.236 at 50.3k, depending on the price action that we get locally in this range, because over here micro wise we are expecting more downside or a bigger range to form in a flat structure for an ABC or a WXY. As mentioned, we didn't yet hit the green 0.236, and also as a small detail, this move to the upside here started corrective. If I go to the 5-minute time frame, you can see it started here with a 3-wave structure to the upside, and also these highs were made on highest volume, which is something that you see mostly in corrective structures and not in impulsive structures. So it increases the probabilities that this move to the upside is a corrective structure, and we still have more a downside to go, or at least a continuation of the range, but the 0.236 is important for a green wave 4 as a minimum target. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.